Hello again, it's Khalfani-Cox. I'm the co-founder of AskTheMoneyCoach.com, coming at you today with a question from one of you, my readers and viewers, who wanted to know about debt management and about how to get some help. Let me read you exactly what this person said. She wrote me saying, I need some advice on lowering my credit card interest rate, which is soon to go up to over 14% interest. But I'm very leery of debt management or credit counseling services due to the underlying fees and the fact that using them could be just as damaging as bankruptcy. Is there anyone that you would recommend in my area? And how can I be sure they're not trying to reel me into their services? I just need someone who can advise me if there's a way to renegotiate my interest rate. Well, thank you for asking the question because it is a good one, but I think you're actually mistaken in a lot of your assumptions. First of all, let me tell you, going to a credit counseling agency or using a debt management company is not, I repeat, not going to be quote unquote as damaging to your credit as bankruptcy. In fact, it won't be damaging at all to your credit rating. It's probably going to help you in order to get a handle on your debts and to start to turn things around. This is how credit counseling works and how it actually can help you to renegotiate those interest rates that you said that you want to get lowered. The credit counseling agencies, the legitimate ones, not the ones that are just going to try to charge you an upfront fee or try to get you to do debt settlement, which is something totally different. Debt settlement is totally separate and apart and distinct from credit counseling and debt management. A legitimate debt management firm is going to look at your overall bills, look at your overall financial situation, assess how much cash flow you have available in order to actually pay your monthly bills. And most likely, if you're going to a debt management company, you don't just have one bill, two or three. You probably got 10, 15, 20. Who knows how many credit card payments or bills that you have to make monthly payments on. But here's where they help. They've already pre-negotiated certain interest rates with creditors. So think of any bank that you might have a Visa or a MasterCard from or any other credit card. If you negotiate on your own, and actually I do encourage people to first try to negotiate on their own. If you negotiate on your own, you might get somewhere. They may actually lower your interest rate, but it's, there's no guarantee for this, of course. If you try it on your own and you are unsuccessful and it doesn't work, that's when you might think about enlisting the help of a credit counseling agency. Personally, I recommend that you go to a non-profit credit counseling agency. There are lots of them out there. They should be HUD-certified as well. HUD-certified credit counseling agents have a lot more experience under their belt, and they've sort of been let's say, I won't say pre-approved, but they've sort of been sanctioned, if you will, by the federal government in terms of having passed through a certain number of hoops to declare that they're bona fide, legitimate credit counselors. They don't just help you on the credit card side. These debt management and housing counselors help you with things like mortgage debt as well. Thus, that's why HUD comes into play, Housing and Urban Development. That's the department there. But you want to find somebody who has low fees or even free, who doesn't charge you big upfront fees just to get started. You don't want to hear somebody talking about all the miraculous promises and what they're going to do because, frankly, a lot of that is just smoke and mirrors. But believe it or not, a lot of them actually can lower the interest rates on your credit cards to either 0% or in the single digits. Now, you mentioned that yours was 14% and above, so obviously this could save you a lot of money. Now, I mentioned before debt settlement, and I said this is totally separate. This is where I think a lot of people mistakenly confuse debt management and debt settlement and think, oh, they just trying to reel me in, as you said. Yeah, I think a lot of debt settlement companies are trying to reel people in because they do charge heftier fees, and they do sometimes tell you, in fact, they always tell you, don't pay your bills. Their approach is to say, if you don't pay for, say, 6 months, then after 6 months, the creditors will be happy to see you, so they're more likely to take a settlement. They want to get something rather than nothing. Thus the term debt settlement. But here's where you get into big trouble, because if you don't pay your bills for 6 months, what do you think is going to happen to your credit? yeah, that will be, as you said, almost like bankruptcy. And that's where your credit gets ruined. Going into a debt settlement plan is not going to ruin your credit at all. Is there a notation on your credit report? Yes, there is. When you enter a debt management program, there's a notation that says DMP. It stands for Debt Management Program. But frankly, that's a signal to your creditors or to other potential creditors that you've started to turn it around, that you are now in a program where you're making regularly scheduled monthly payments on your debts in order to eliminate that debt. With a debt management program, you don't get out of paying your debts. You pay every dollar that you owe and then some. What it does do for you, however, is eliminate or lower drastically those interest rates. And that saves you money in the long run and helps you pay off your debts too. So I hope this has been helpful to you. This has been Lynette Khalfani-Cox of AskTheMoneyCoach.com.